Hello everyone, Joe here. I've been wanting to make a YouTube channel for a while now, with a series of videos on investment strategies, financial advice, and some other tips and tricks on the same subjects. Currently active duty military, I started with nothing, like some of you may be. Some of you may already have a plethora of knowledge, but there's always something to gain. I'm on my way to becoming an intelligent investor, with a lot of gained knowledge, but I still have a lot to learn. I get asked a lot at work all the time by people to teach them different things about like stocks, how to trade, what to trade, why to trade it, and it just becomes redundant after a while. Um, so I decided to make a YouTube channel. That way, it avoids the redundancy of constantly repeating myself, and I could also show some visuals on my computer screen of different things that I do. Um, let's see. First off, I want everyone to understand my mindset is strictly logical. Everybody has to have a set of rules created specific to your person in order to be successful in this type of world. There's a very finite line between intelligent investing and playing Russian roulette with your money, so to speak. Be meticulous and intense with your research, but at the same time, take breaks to refresh your mind and regain your footing. Understand that there are advantages out there, so take advantage of those. However, with the disadvantages, I feel there is also something to gain. I feel you can find disadvantages and turn them into advantages. And I would like to show you an example of that today in my first video. So right here, as you may see on my screen, is a website called FinViz. Now, what I do with this site, I use this site for stock screening. So when I started out, there was three main things I did. I did FinViz for my stock screener, Ameritrade to see the chart patterns, and then I traded on Robinhood, the mobile app, because it was free commission. I was subject to the pattern day trader rule when I started. I only had about $4,000 at the beginning, but I lost a lot of that down to 500 before I started actually becoming successful. So realistically, I started gaining when I was at $500. So it's very possible to start with a lower amount of money and get up there. You just have to find something like the mobile app Robinhood to avoid the commissioning fees when you're coming straight out the gate. So back to FinViz, the thing I use this stock screener for is pretty much filtering the different stocks, seeing what has momentum on the day, whether it be negative or positive. You can see on the right here, this is pretty much the overall market sectors. You got technology, services, basic materials, healthcare, financial, all that type of stuff. And then right here, it gives you a brief overview, a column of negative gainers, positive gainers. Now you may see some red in the positive. That means because they started off very strong on the day to gain a huge price jump, but have since then fell off. Now, the thing I use this site mainly for is simple. I am not logged in and I'm not registered because I'm not a premium user. That is the disadvantage of this site. So the disadvantage is when you are not registered, I have noticed that with FinViz, it plays a 15 to 30 minute delay. I can't remember exactly what it is, but it's not real time. It's like 15 to 30 minute delay. However, one of my rules is to find the disadvantages and then twist the advantages out of them, turn it into an advantage. So what I do, I go to screener right here, and then the two main things you want to look at is the current volume and the price. So let's say, for instance, we're talking under $5. If you're day trading, a lot of times with penny stocks or cheaper stocks of that nature, I like to stay at 5 or under, somewhere around there, somewhere in the single digits. And then for the current volume, um, you you kind of want a higher amount of volume, because if you get into a stock and it starts going down, you want to be able to get out. So if a stock has like under 100,000 shares that have been traded actively that day, you kind of are screwing yourself over, because you could buy in because there's probably a lot of people trying to get out because it's plummeting. But when you try to get out, you're going to be put in the back of the line and there's not a lot of volume. So it's going to take a long time for you to get out of it. And you're going to be stuck and then end up selling out when it's dropped even lower, more than likely. So yeah, you want to go to volume. I like to keep it over 1 million just to be safe. And then the main thing here, the two main things I look at is, that's another thing you got to deal with the ads if you're not premium, is the sectors. So here the change right here, this tab, you click it once and it'll sort it by the negative momentum. So a thing to understand before you look at these is what a reverse split is. A reverse split is where a company reduces the amount of shares, let's say 2 to 1, to increase the value per share 2 times. So if you have, your shares are $2 a piece, you split that number amount of shares in half, but you double the price. The price of your company and shares, well, the shares are going up, but the price of the company isn't exactly increasing, but it gives the facade that it is. So keep that in mind. As you see, like we look through here, you see how this stock dropped way down. That means they probably split. They probably increased the amount of shares, thus reducing the price per share. And now the price is starting to go up. So with the big gaps right there in one day, it usually shows a reverse split or a split, and you don't want to really mess with that because it's just trying to find its happy medium again. So we'll skip this one. Another main thing to look at too is over here. You could kind of see all the volumes around the same, but if you see this random one has 29 million, that to me is indicative that it's probably not a reverse split or a split. So you go over here and you see how it's been steady. Somewhere right before April, it looks like it had a either huge drop or a split, but now it's started to gain a little momentum and then it's about to drop off again. So that might be one to take a look at. Now if you're investing, you just click the change again and you see, let's see here, this 22 million right here, right? Kind of stands out. Price gain of $1.30. So you go over, and oh, this one as well. This one has been steadily rising. But the thing with FinViz is you could look at these, see it's at 55 cents, correct? 21% change in the far right. So it's at 21% change in the far right. So what you would do is you would go to Ameritrade. You type in FLKS for that screening symbol, or the stock symbol rather, and then see where it's at the moment. You could see, compare it 15, 30 minutes in the future essentially. So that way you're kind of creating your own trend, your own capture to see what this stock was at 15 to 30 minutes ago and what it currently is at on Ameritrade. So if this thing says it's at 55 cents right now, 15, 30 minutes ago, and on Ameritrade it's shown it's at 61, that's a 6-cent gain in 15 to 30 minutes. You know that over the last 30 minutes it's been steadily rising a good bit. However, if it's at like 53 cents on Ameritrade, that means it's been struggling with that threshold of 55, or that ceiling of 55 for about 15-30 minutes, failed to break through and dropped off 2 cents. And that's typically not a good sign, and you might want to avoid that. But that's the big thing with FinViz. You could use it to screen stock, see what has momentum, get ideas of what to look at, what sectors to look at. See, healthcare is doing pretty good at the moment. Um, so yeah, I mean, you could compare it to Ameritrade. The thing with Ameritrade also, it's $6.95 in or out of any trades. That's why you want to stick with Robinhood early on, in my opinion. Um, but the good thing about Ameritrade is it is a, I think it's like a, it's been so long, it's like $50 to open an account or something, but that's what it is, $50 to open an account. You spend the $50, open the account, and you could just take your $50 back out and you have an open account. I don't know if the purpose of that is just to link the account to your bank account or what, but yeah, you don't need to maintain the money in there to maintain your account. Um, but yeah, if you go to Ameritrade, another good thing about it is you go to education here and say stocks, options, bonds, mutual funds, whatever you're into, say stocks, right? Click on stocks, right? Give it a second to load, boom, this comes up. You got the tab over here for stocks, and there's investing in stocks basics. It's 4-minute, 13-second video. Like it's just, it's like a big education. It's a big learning center for really anything. So you're paying $50 just to get refunded $50 and then have access to these videos of pretty much anything you want to learn in a centralized location, being Ameritrade, while at the same time getting real-time updates of stock, stock tickers. So that's a good thing. Using Ameritrade for the charts and the education center, FinViz for the screener and delay and creating your own trend lines. And then if you're just starting out, the Robinhood app for the commission-free trades. In the future, I think this is going to be it for this video. In the future, working on creating intros and outros for these videos and stuff. I'm going to get into more specifics, like what rules I've created, the different types of stock trading, stuff like that. So if you have any ideas, and if this video does get any hits, feel free to leave a comment on what you'd like to see, how I can improve, because this being the first video, it is kind of awkward talking to myself in an open house. So yeah, just let me know, and I'll make the changes. I appreciate watching. Thank you.